37%. Let that number sink in. If the stock market dropped 37% in a single day, they would shut down the New York Stock Exchange. The president would be on national television declaring a state of emergency. But when silver drops 37%, silence. The media calls it a correction. Your broker calls it volatility. I call it what it actually is, grand larceny. If you're watching this, you're likely sitting on a loss right now. You're looking at your portfolio, and you're feeling that pit in your stomach. That fear? That is exactly what they engineered. This was not a natural market movement. Natural markets do not move in straight lines down. This was a coordinated algorithmic liquidity event designed to flush you out of the system before the real repricing begins. They didn't just crash the price, they crashed the sentiment. They want you to hate silver. They want you to believe that silver is dead. But here's the truth that CNBC will never tell you. The physical metal did not move. Go to your local dealer right now. Try to buy an American Silver Eagle for 37% off. They will laugh in your face. The price of physical silver and the price of paper silver have completely decoupled. What we witnessed yesterday was the death of the COMEX paper derivatives market. The Bullion Banks, specifically the heavy hitters like JP Morgan and Citi, dumped billions of ounces of naked shorts onto the market in the middle of the night during thin Asian trading hours. Why? Because they are trapped. We are in a global liquidity crisis. The banks are insolvent. They are leveraging your deposits to gamble on the futures market. And yesterday, they got caught on the wrong side of the trade. To save themselves from a default that would rival the 2008 financial crisis, they had to trigger a margin call cascade. They pushed the price down through key technical support levels, $28, $26, $24, intentionally triggering the automatic sell orders of retail traders and hedge funds. They used your stop losses to create the liquidity they needed to cover their own bad bets. You're not the customer, you're the liquidity. But stay with me, because I found something in the order flow data that they tried to hide. There was a specific buyer stepping in at every single bottom. While the algorithms were selling, a whale was buying. And this wasn't a hedge fund. This entity wasn't buying contracts, they were taking delivery. Who buys when the world is selling? Who has the cash to absorb a 37% crash without blinking? I'm going to show you the shadow ledger in a moment. And when you see who is on the other side of this trade, you will realize that selling your silver right now is financial suicide. This crash wasn't an exit. It was a transfer of ownership from the weak hands to the strongest hands on the planet. Let's dissect the weapon they used. It's called an Algo-Trap. The crash didn't start because of news. There was no bad economic data. In fact, inflation numbers are hotter than ever, which should make silver skyrocket. So why did it tank? Because the machines were told to execute a search and destroy mission. The algorithms know exactly where your stop-loss orders are sitting. They can see the order book. They saw that millions of retail traders had their safety net set right below the 200-day moving average. It was a giant pool of liquidity waiting to be tapped. At exactly 8:30 a.m., just before the New York Open, they initiated the dump. They threw massive sell blocks, thousands of contracts per second, at the market. This artificial pressure pushed the price down just enough to hit that first layer of stop losses. Once those retail sell orders triggered, it created a snowball effect. Selling begets selling. The price plummeted, triggering the next layer of stops, and the next. It was a domino effect of pain, engineered by a few keystrokes from a trading desk in London or Chicago. They forced you to sell your silver at the bottom, and guess what? They bought it right back from you instantly. This is the classic Wyckoff spring pattern on a massive scale. They drive the price below support to shake out the weak hands that you and me, so the smart money, can accumulate positions at wholesale prices. It is psychological warfare. They are banking on the fact that you are emotional. They know that when you see a 37% drop, your brain screams, flight? But the wolf? The wolf sees opportunity. I want you to look at the volume profile. Usually, in a real crash, volume dries up as the price falls because nobody wants to buy. But look at yesterday. The volume on the dip was explosive. It was the highest volume day of the year. This proves that for every panic seller, there was an aggressive buyer. Someone was stepping in with buckets, catching every single falling knife. This wasn't a liquidation. It was an accumulation phase disguised as a catastrophe. And here's the smoking gun, the Shanghai Gold Exchange, SGE. While silver was crashing in New York and London, the price of silver in Shanghai was trading at a massive premium, almost 12% higher than the global spot price. This is an arbitrage opportunity that should not exist in a free market. Traders should be buying low in New York and selling high in China, closing the gap. But the gap isn't closing, it's widening. This tells us that the physical metal is draining from the West and flowing to the East. The West is selling paper, the East is buying metal. The 37% drop is a paper price illusion. It exists only on the futures exchange. In the real world, the supply chain is broken. Mints are running out of blanks. Solar panel manufacturers are scrambling to secure inventory. The industrial demand for silver is vertical, yet the price is crashing? That is an economic impossibility, unless the price is rigged. And if it is rigged, it means the spring is being coiled tighter and tighter. When this manipulation breaks, and it will break, the snapback won't be 37%. It will be 300%. So, who caught the falling knife? Who had the audacity to buy billions of dollars of silver while the rest of the world was puking up their positions? I tracked the flow. The data points to the custodian banks. We are talking about the entities that hold the assets for the world's largest ETFs. Specifically, look at the flows into SLV, the iShares Silver Trust. On the very day the price collapsed 37%, the authorized participants for SLV reported a massive inflow of physical bars into their vaults. Do you see the hypocrisy? They tell their retail clients, people like you, to sell because silver is a bad investment, while simultaneously, their institutional desk is backing up the truck to load up on physical bars at a discount. This is the shadow ledger. The public ledger shows panic selling. The private ledger shows massive accumulation. But the real whale isn't even a bank. It's the green energy complex. You need to understand that silver is not just money anymore. It is the strategic oil of the 21st century. Solar panels, electric vehicles, 5G towers, AI servers, none of it works without silver. The tech giants know this. They know that mining supply is flatlining. They know that Mexico and Peru are struggling to get metal out of the ground. So when the price drops 37%, companies like Tesla, Samsung, and massive Chinese solar conglomerates see it as a flash sale. They are bypassing the COMEX entirely and securing off-market deals directly with refiners. This creates a supply shock that is invisible to the average trader. The COMEX inventory is being drained, not by investors, but by industry. Once that industrial silver is used in a solar panel or a missile, it is gone. It doesn't come back to the market. It is consumed. We are burning through the world's silver stockpiles at a record pace, and yet the price is lower than it was in 1980. That is the definition of a broken market. The 37% crash accomplished one major goal for the elites. It allowed them to cover their short positions cheaply, and it allowed industrial giants to restock their inventory at 1921 prices. They transferred the wealth from your account to their warehouse. They played you. But now that you know the game, you can stop playing by their rules. So, what do you do when the world is burning down? What do you do when the charts are bleeding red and the media is screaming sell? You do exactly what the banks are doing, not what they are saying. You become the predator, not the prey. The 37% crash is not a tragedy, it is a gift. It is the greatest financial gift you will ever receive in your lifetime. The manipulators have handed you a time machine. They have momentarily reset the price of silver back to levels we haven't seen in years, giving you one final chance to exchange your dying fiat currency for real, constitutional money before the doors close forever. If you are holding physical silver, you have lost nothing. You still have the same number of ounces you had yesterday. 1 ounce is still 1 ounce. The only thing that changed is the fake paper price attached to it by a corrupt computer in Chicago. Do not let them trick you into valuing your wealth in their terms. They measure wealth in dollars, we measure wealth in ounces. And right now, your dollars can buy 37% more ounces than they could 2 days ago. This is the wealth transfer we talk about on this channel. It doesn't happen when the market is going up. It happens when the market is crashing. The weak hands panic and sell their assets to the strong hands for pennies on the dollar. Today, you have a choice. Are you going to be the victim who sells at the bottom, or are you going to be the wolf who feasts on the panic? Here is your battle plan for the next 48 hours. First, turn off the news. They are programmed to scare you. Second, look at the physical premiums. If the spot price is down but the premiums are up, the crash is fake. Third, if you have dry powder, cash on the sidelines, this is your back up the truck moment. Go to your local coin shop. Go to the online bullion dealers. Clear them out. Take the physical metal out of their vaults and put it into yours. Every ounce you take off the market is a bullet removed from their chamber. It makes their short position even more dangerous. We are watching the death rattle of the fiat system. These violent crashes are not signs of strength. They are signs of a system that is breaking apart at the seams. They can only suppress the price for so long before the physical reality overwhelms the paper delusion. When the dam finally breaks, and it will, the price of silver won't just recover, it will go vertical. It will do what nickel did. It will do what cocoa did. It will leave the solar system. You are now part of the prosper path. We don't fear volatility, we exploit it. We don't trust the banks, we become our own banks. Let the sheep panic, let the tourists flee. We are digging in, we are stacking deeper. And when the smoke clears, we will be the ones left standing. If this video opened your eyes, hit that like button to trigger the algorithm and wake up more people. Subscribe if you want to survive the crash that is coming next. Stay safe, stay liquid, and keep stacking.